You're watching Business Today Television. I'm Sakshi Patra, with me Shel Patnagar. This is Market Today, a show where we'll help you understand the closing action on the D Street. Well, if you look at the markets, of course, they've inched towards the high point of the day. At one point, we did see 22,700 also being reached on the upside as far as the Nifty is concerned. So 0.2% higher for this one, but it's the Nifty Bank that's not contributing. It's weaker by almost 0.4%. So private banks, PSU banks really seeing some drags coming in. Among the other sectors, it's definitely the broader markets, especially the mid-cap index that's hit another record high in trade today that continues to soar higher. So the broader market sentiment is improving. And among the other sectoral indices, autos continue to drive in the faster lane, over 1% higher for now. Along with this, it's the metals that are shining bright, 1.4% higher for this one. Oil and gas, healthcare, some gains can be seen on this one too, but it's the real estate space that is dragging in trade today, along with if you look at some of the losses that could be seen on the private and the PSU banking space and the media stocks as well. Those are the ones that are dragging the street. As far as the top movers on the Nifty are concerned, it's the oil and gas majors, especially the OMCs like BPCL, that continue to soar higher, now up 4% odd. Power Grid follows. We also have Asian Paints, Bajaj Auto and NTPC, and also Adani Enterprises, some of the other big movers on the Nifty right now. Among the F&O movers, of course, a whole host of earnings and brokerage upgrades have led focus on the stocks like Cholamandalam Investment and Finance, that's now up 9.7% in trade. India Mart, Intermesh, REC, PFC, these are the ones that have been ruling as far as the F&O big movers are concerned. Share.
Good afternoon, ladies and gentlemen. Let's drill a little deeper into what has been a fairly okay weekly expiry for the Nifty. The index is extremely range bound, as was discussed earlier. The low being 22,570 and the high being 22,700. Most likely, it's going to expire somewhere between 22,670 to 22,620. Let's see how it goes forward. But the crux of the game today has been power sector stocks, led by earnings boy RECL. Remember, the earnings came 2 days before, and the counter has been on absolute fire, whether it is volume, whether it is open interest, whether it's price action. On all stacks, it has proven to be one of the best counters over the last 2 years, over the last 2 days. The reason behind it is very simple. With the GST number coming in at a record high, it essentially means that the entire economy is firing on all cylinders, and therefore power, which propels all manufacturing units, is doing extremely well. If you look at power gainers across the board, they are in financing companies such as PFC and REC. Both of them are the two top traded counters as far as the NSE is concerned. 3,853 crores of transactions done on REC, 9% higher. Power Finance Corporation is 5.6% higher, 2,340. There are record highs on Power Grid, 4% higher, 313.8. About 1,150 crores worth of transactions happening, and companies such as Tata Power, NTPC, JSW Energy, Adani Power, CESE, the entire power sector in terms of producers of power, in terms of financiers of power, and in terms of ancillaries such as BHEL, are all doing phenomenally well. We are now joined by Mr. Chokalingam, founder and MD for Economics Research. He's with us. Good afternoon, Mr. Chokalingam, and a very warm welcome to you on Market Today. How do you see this move in REC and PFC? What do you make out of it? Of course, earnings are fantastic, but is this something that you were expecting, or is this overdone?
No, the performance was expected, but then the kind of valuation given to this stock, I am not able to visualize. You and I know historically they used to trade around 1 time or maximum 1.5 times. Now the valuation multiples have gone far beyond. So yes, whole market is rising. Today we are close to 410 lakh crore. I think we are just 2.5% away from $5 trillion market. But still, as I discussed last time also, I would advise a little caution till June 4th. I don't know what is the outcome. But I'm sure that the FIs would continue to sell till the election results out. So therefore, it is better to stay for the results, and then if needed, one can pay premium also to buy quality stocks.
Okay. Mr. Chokunlam, are you comfortable with the kind of moves that you're seeing on the Nifty? This is against the backdrop of record GST collections and of course all quick indicators in the economy that you track with such detail, whether it's auto numbers, whether it's fuel consumption, real estate sales, all of them flagging record highs. Are you comfortable at these levels, or do you think the value on indices such as mid cap, small cap, Nifty in particular are overdone?
I'm not worried too much about Sensex and Nifty, frankly speaking, because at a trailing P of 24-25, when economy is expected to grow around 7 or above 7%, I think definitely the P ratio would shrink. It's not overvalued. And there are certain packets have not participated. If you take something like a Asian Paint, just to give an example, of course, we have a buy rating on that. Now, suddenly, the oil price has cracked 8% in the last 8-9 days, despite tension in between Iran and Israel. So it's big positive. So what I'm trying to say is that there are certain pockets of or certain segments within Nifty and Sensex. Still, there is room for those stocks to rise, and therefore the Nifty Sensex valuations do not give me fear. I am terribly fearful on only small and mid cap segment. In mid cap segment also, there are a lot of results are coming, stagnating, profit growth, but the P ratio 30, 40, 50. This is what giving me a lot of fear. So as far as old market is concerned, I'm not fearful. I'm pretty confident that the Sensex in Nifty, unless there is a severe instability on the political front, these two would continue to rise in 2024 calendar year as well. But last time the small and mid cap indices or stocks, they rose continuously for 4 years in a row, 4 5 years in a row. That is 2014 to 2018, 4 years in a row, and then came massive fall in 2019 when nothing has happened to the economy, nothing happened to the world market. So similarly, this time from 2020 March bottom, we are seeing a continuous rally in small and mid cap. So that gives me worry. Ultimately, the profit booking would happen, and liquidity is not enough to absorb a small fraction of the overall market cap. So therefore, I would continue to advise some caution on small and mid cap, and therefore one should have a tilt towards Nifty and Sensex stocks.
Okay, Mr. Choklangam, very good afternoon to you. Tell us, what do you make of the move that we are seeing across the board in the power space, and are you also looking at investing afresh in any of these? Because we've already seen a dream run really pan out, be it for the power producers, the distributors, or even the financiers. We've actually seen a substantial run up already, but with the earnings coming in, some of them surprising on the positive side, like REC, for instance. I did speak to the management, and the management is confident of being NPA free by FY25. Also looking at increasing the renewable energy portfolio going forward from here, especially the private side, from 10% right now as a contribution to the revenue to 30% going forward from here. So all of these are looking very confident statements as of now. How are you looking at this space, sir?
Comfortable at this space in power sector. The best way to see is what is the enterprise value per megawatt. There are many companies which are trading at 8 crore or even 12 crore per megawatt. It's very easy to understand the valuation of power sector, because if new power plant costs you 4 5 crore, there is no rationale in paying 10 crore or 12 crore or for that matter 15 crore per megawatt. That is enterprise value per megawatt. So that is the kind of valuation we see for majority of the stocks. I may be wrong, but the history has proven one thing, at least for the power sector, again and again. Whenever such boom happened, they never lasted for long. I mean, they corrected a lot. And one or two stocks, in fact, we recommended at one third, one fourth of the current value, and we exited also. We gave sell call. So I'm not able to, go back and then tell the investors to buy these stocks.
Okay. How about the FMCG space? Dabur has just come out with its earnings. I do not know if you got the time to really look at it. The positive factor is that the volumes have come in higher than the larger street estimates of 3 to 4%. It's come in at 4.2%, and the margins have improved versus last year to 16.6% here. Of course, profitability factor revenue may have just about come in line with expectation or slightly below, but it's the margins and the volumes that have come in slightly higher. The entire sector has been a big laggard up until so far, and the stock has also not done much over the last 1 year. After these results, are you looking at the stock positively at all?
Certainly not. I agree with you that FMCG sector has not done well. Maybe to some extent, if you take 1 2 year low, something like ITC, Nestle, they have done slightly better. But you have stocks like Dabur, HUL, severely underperforming. I think the sector as a whole would either underperform or would remain neutral because the rural sector is not picking up for the FMCG sector. The demand is quite poor. That is why stocks like Nestle, which is more tilted towards urban center, is doing better than stock like ITC, which is diversified one, is doing better. But otherwise, the pain is there for most of these FMCG companies. In my view, that might continue in the short term because the water storage in the major reservoirs is pathetically low. And then we all know about the heat wave. The RBI itself said that the heat wave, could be a risk factor on inflation front. So, which means the rural demand might still again under be pressure in the longer period in the short term. So, therefore, I would not believe that FMCG would create a very decent return. But however, as I mentioned, I've been quite nervous on small and mid cap. So, therefore, for conservative investors, definitely stocks like Nestle, ITC, for that matter, even Dabur, one can have exposure. It is purely from defensive perspective, but I don't think one can make big money in these counters in the short term.
Right. We'll be shortly joined by Mr. Ankush Jain. He's the CFO of Dabur, and by 3:05 p.m. you will see a lot of granularity in the results that have just come in. For the record, fourth quarter profit for Dabur rose about 18% to 341 crore rupees. There was a sharp uptick in the quarterly sales at about 2,815 crores, and a dividend payout of 2.75 rupees per share for the last quarter has already been announced. The stock has done absolutely nothing. It's down about 3% over the last 1 year if you remove today's performance, and down about 5.7% in the past 3 trading months. Let's take a detour in the market. We are already just 45 minutes away from today's close. We'll take a look at how the moves are on the National Stock Exchange. For the moment, 1,040 companies are in the green, and an equal number, 1,056, are on the red. Because it's expiry day, there's some sort of equilibrium coming into the markets. The bulls and bears are evenly poised. We track 16 indices for you, ladies and gentlemen. Out of 16, about 12 are in the green, and to say that the next 50, the Nifty Next 50 and the Nifty Alpha 50, along with the metals and the power index, are the top 4 performers. So the action is now completely on the side of mid caps. The large caps are now just pausing. More results coming in, and this time from RK Forging, Ramkrishna Forging. The company's announced a fourth quarter net profit of 93.8 crore rupees versus 68.5 crore rupees. Revenue has surged dramatically, 1020 crores versus 890 crores for the 2 quarters that are in question, and there's been a sharp increase in the EBITDA value as well. 217 crores for the quarter gone by versus 194 crores in the quarter year ago. EBITDA margin is almost flat, 21.3. Let's just take a look at what RK Forging is doing as far as charts are concerned. The counter has been in great demand over the last 3 or 4 months. Remember, this is one of the suppliers to Tesla as well, 773, flat as flat can be. What else is buzzing in the markets? Mr. Chokalingam, your view on the rally that we are seeing in metal counters today, and of course the US Federal Reserve, which has now just confirmed fears that you might see a single rate cut happening in the calendar year 2024. Remember, we started with expectations of 7 rate cuts over the next 36 months and 4 very quickly, but all those things now receding further and further. Your view on the US Fed move, and of course what do you think of metal stocks in relation to that change?
Certainly, this is what we discussed last week also. I continue to remain negative on metal space because stock market is at peak, and metals sector as a whole on the stock market also at their peak. And in the last 20 years, I never seen the convergence of both lasting for long, and the valuations have been stretched now. Most of the metal stocks are in double digit. Even Hindalco used to trade at a poor single digit of 8, 9 for long. But now many small caps are trading at even 20, 25, 30 PE. It is not sustainable. I completely agree with you. There is likely to be a delay in rate cut by US Fed, and it may not happen in June, July also, and definitely which is negative for metal stocks. And already the oil price has reacted to the Fed comments, and I believe the metals also will start correcting quite significantly in the short term itself. So I still believe that this is a good time to book profits in the metal space.
Okay, what we'll do is we'll mark some stocks that have hit record highs and that we've already discussed. Remember Ashok Leyland, this was the first pick that came in from Mr. Rajesh Palvia in the morning trade. The counter is now 4.7% higher to 201.6. Needless to say, this is a record high. Other stocks within the NSE 500, and that list is very, very long today, somewhere like 28 stocks that have hit record highs, are the following. I'm taking unusual names, the ones that we haven't discussed yet, but are showing on radars of investors and traders. This is the back-end mutual fund company K Fintech, now 9% higher, 817. Remember, over the past 4 quarters, a lot of foreign institutional investors have consistently, quarter on quarter, increased stake in K Fintech. Raymond, this is the real estate play. That is up 6.7%, 2244 for you. We've marked the entire power generation as well as power financing space. Let's look at Federal Bank, 3.2% higher. It's the intraday high for this is 170.3. Lots of changes happening here for the positivity. Indigo, for almost 4100, a change of digit, 2.5% higher. Mr. Chokalingam, your view on Interglobe Aviation, falling crude oil prices, a dip of about 5%, has resulted a record high on Indigo. Are you a chaser of this stock, or are you on the sidelines?
No, we are not buying it. It may not be a right strategy, but we let it go. Whenever a stock rallies like this. But then certainly those who are lucky to buy at a lower price, they may continue to hold because as we discussed, the oil price is down almost 8% from 1 month high. There is a possibility if there is a truce between Israel and Iran, or Israel and Palestine, then oil price can crash also. That would be positive. And second, the passenger traffic has gone up substantially in the country. It is better than pre-COVID levels, and Indigo remains undisputed leader. So therefore, those who bought at a lower price definitely can hold on and wait for more positive trigger in the short term.
Okay. Mr. Chokalingam, how would you advise on Adani Group stocks? A lot of them have reported earnings since over the last 2 days, and even today we've seen Adani Ports come out with its earnings as well, and net profit here has risen about 76%, and revenue went up about 19%. Anything that's stuck out for you from the earnings from the Adani Group?
Among the Adani stocks, one can continue to buy Adani Port. particularly if there is any marginal correction, because India's exports may not be growing, but India's imports are consistently growing, and it is substantially more than the exports. It is almost 170% of India's exports. So that would be favorable to Adani Port, a leader in the port business. But other stocks, the short-term, the momentum investors may continue to hold, and this momentum might continue in the short term for other stock. But within the group, the Adani Port is the most attractive stock in terms of fundamentals.
Okay. Another results have come in, and this is for Blue Star. The company has reported a revenue of 3,328 crores versus 2,624 crores of consolidated revenues posted last year same quarter. The profitability, however, has seen a decline from 225 odd crore rupees last year same quarter to about 170 odd crore rupees. The company has also announced a 7 rupees per share dividend as well. These are the kind of details that I am getting. How would you look at Blue Star, sir, after the earnings? Slight disappointment for sure on the profitability figure.
It looks apparently disappointing, but normally smart investors should sell this kind of durable stock at the peak of the summer, because once the summer month is over, this quarter is over, the next quarter will be pathetic. So there is always a trend. The stock price tend to peak out along with the summer, and then they tend to correct a lot. So also considering the valuation, perhaps this is the best time to book profits in Blue Star.
One of the most important facets of the brown goods industry, which is the company, the air conditioner, brown goods makers such as washing machines, fridges, those things that are a part of your purchase as capital goods inside your home are facing a crisis because of an unlisted Korean giant, which is offering a lot of discounts in terms of sales to clear its inventory. Therefore, companies such as Blue Star have to compete on the price point. You will see rising sales of Blue Star. 22,600 revenue is at about 3,330 crores versus 2,624 crores, but there's been a very sharp fall in fourth quarter earnings. Remember, Blue Star was also one of those counters which rallied very sharply from a low of about 1,300 to a high of about 1,500 in a span of 2 weeks in the first fortnight of April, because of the kind of heat wave that we are seeing. Another earnings that have come in are from Adani Enterprises. Fourth quarter consolidated net profit has shrunk to 450 crores from 720 crores. Adani Enterprises revenue for the fourth quarter is at 29,200 crores versus 28,900 crores. The counter slipping in trade down about 1%. Again, Adani Ports over a quarterly basis, Adani Enterprises over a quarterly basis has done absolutely nothing, down 1.2% as far as prices are concerned, and it is slipping about 1% lower as well. That is how the moves are coming in. I think what's really good, and we are sort of missing the bus, is the Cipla numbers. We need to just look at the price action that's happening on Cipla at the moment. Cipla is at about 1434, 1.7% higher. Let's see whether this one's touching record highs or not. No, it's still far off, 1425. Mr. Chokalingam, do you get valuation comfort in counters such as Sun Pharma, Cipla, Dr. Reddy's? What would be your top pick from this sector?
Among these, I still would prefer Cipla, relatively cheaper than other stocks. particularly Sun Pharma valuations are highly stretched. So according to me, Cipla, particularly after 100 rupee correction from the 52-week high, it looks relatively better bet in the pharma sector.
Okay, one of those stocks that has done fairly okayish when it comes to the pharma space today. Cipla is the third best gainer, up 1.8%, and it shows a decline in open interest, down 1.4%. It essentially means that a lot of bears who had pressed short trades on this one in the futures are now removing those two trades. The two top performers as far as the pharma pack is concerned are Zydus Life, almost 1,000 rupees in terms of stock futures, 4.3% higher, and of course Biocon, 4.2% higher, 312, down about 1%. We're now at 257. About 33 minutes of trade are left on this weekly expiry day. The Nifty is doing practically nothing, 22,680, 77 points higher. Let's hope for a gamma spike. Remember, these are the things that happen on weekly expiries. You get a very sharp movement in either at the money call or at the money put. We'll be keeping an eye out on that one. But for the moment, nothing seems to be working. Let's also look at the volume buzzers. Remember, these are necessary segments to look at because they give you an indication as to where price is headed in terms of in combination with volume. Okay, which one would I want to highlight? I think we've discussed many of them. Federal Bank, let's discuss Federal Bank. Earnings due in a moment, and of course there's a momentous development in terms of possibly the joint managing director of Kotak Mahindra Bank, who's resigned yesterday, may join as the CMD of Federal Bank. Mr. Chokalingam, do you find Federal Bank adequately valued?
Yeah, after pickup, it's reasonably valued. But of course, these kind of banks are there in the system for nearly 1 century, and they successfully, faced all the crises in the last 100 years, and slightly stretched, but still size is quite bigger compared to other old period sector banks, and therefore long-term investors can continue to hold. But otherwise, my top pick within the old period sector bank is Karnataka Bank. It is still trading at a 10% discount to adjusted book value. Perhaps that is the only old period sector bank which is trading at discount to adjusted book value. 1.5 lakh crore is the business size, and if you take a market cap to business size, also one of the cheapest banks. And what gives me a lot of confidence in this stock is that the institutional participation in the stock has increased phenomenally in the last 2 years. So right now it is close to 50% stake is held by institutional players and corporate. And recently, ICICI Mutual Fund has, ICICI Insurance Company has taken stake at 265 rupees. And the bank has mobilized 1,500 crores through QIP in the last 6-7 months at a significant premium. So all this would augur well for the bank. So I would strongly recommend Karnataka Bank, and personally also I have invested in Karnataka Bank.
Okay, well, on that note, thank you so much, Mr. Chokalingam, for being with us on the show and discussing various insights into stocks and sectors that we've discussed with you on the show, and hope to see you very soon back on Business Today TV and on Market Today as well. Time to also welcome our other guest on the show. Now joining us is Mr. Sharad Avasti. He's the head of research at Smiths, and he's now joining us. Mr. Avasti, good afternoon. Good to have you with us on Business Today. A lot of earnings really coming in at this point in time. How are you really looking at the market momentum, and where exactly are you keeping your focus on?
Yeah, I think being the quarterly result season, that is something that usually happens. But I think most of the numbers till now are more or less even Stevens. We do not have too much of outperformance or too much of underperformance, and generally the better results usually come in the first half of the numbers flow. And I believe the second half you will have most of the numbers that will have some pain or some pain points here and there. So I believe most of the good numbers have already come in, and the rest of the numbers might not really add much to the upside in terms of expected numbers. So I think from here on, your quarterly numbers might not throw much of a positive surprise. Rather, most of them should be sedate to largely negative. Regarding markets, I think the way the interest rate mood has reversed, we are of the opinion that most probably this view would change over the next 3 months again as growth data and inflation data subsists. I think there is a high probability that we will be back on an interest rate cut kind of regime in the second half of the calendar year. So maybe this quarter goes on a bit slow and mundane kind of. You only have the elections to rejoice. Beyond that, I think gradually next quarter onwards, you begin to see the interest rate cut talks gaining momentum, and that should provide a lot of strength to the markets. One sector that I certainly think would benefit and has also corrected substantially as a broader sector. I think IT as a sector remains that space that should see a strong revival. And within IT, I think I would go with on the front lines. I would want to. I think Infosys is a good bet for targets of 1750, 1800. And on the second line stocks, I think LTIM is a very good bet to hold on at these levels for initial targets of around 6,000.
Good afternoon, Sharadji, and a very warm welcome on Market Today. As always, your very concise and thoughtful opinion is very well valued by our viewers. I'd just like to ask a broader question on what is your estimate of the kind of election voting that we have seen in the first two phases against the backdrop of a very strong economy. One set of the market believes that lower voting percentages are actually helpful for the incumbent BJP because they point to lesser anti-incumbency. How do you see those, and what is your opinion on how this economy is running on steroids given the GST output that we've seen yesterday?
Good afternoon, Sharad. I think in terms of elections, everyone wants to speculate something or the other. But as you rightly pointed out, lower voter turnout is actually good for the incumbent government. Usually higher voter turnouts are associated with a change in government. So I don't think that's a challenge for the for the existing government. I think there is a lot of speculation whether they will get 400, 350 or 450. But I think what you would largely want is a stable government, whether they get it with a slight majority or a thumping majority, that is something else. But the type of inroads they made into some states where they were not present hitherto earlier, I think that should be seen as a very positive development, even for the state level elections. And regarding GST collections, yes, they have been very strong. I remember when they were around 1,15,000 crore, we were talking about high commodity prices largely contributing to the higher GST collections. But I think a lot of the parallel economy has been roped in because of GST, and with these collections, there is a high probability that they will most probably introduce some more measures to improve the GST, more products under the ambit, the more contested products maybe. And then there is a possibility that finally we will have something being done in terms of the inverted duty structure also. Some changes might happen there. And I don't think the economy is largely on steroids, particularly in India. I think it is a very strong base that we are building. Supposedly, you could look at the defense numbers. I was just looking at it the other day, around 3-4 years back, we were looking at 1,000-1,500 crore kind of exports. Today, we are doing around 20,000-22,000 crore of exports. I think these are all meaningful things. Though every government can't do all the rights, but I think these are very good developments. I think 5 years ago, we could not have envisioned this kind of growth or export capability from India in defense. Similarly, if other things also pick up, I think there is a high probability that the capex cycle will be very strong over the next 3-4 years. Renewables and everything should play out very well. So I think I'm very bullish. I think we should continue to see a strong market going into the second half of the calendar year.
Okay, and I think the new normal as far as monthly GST collections are concerned for the financial year that's begun in April will be in the vicinity of say 1.95 lakh crores per month to about 2.10 lakh crores. Let's see how that is. It's about an average 12% higher from the same time a year ago, and yes, almost everything is now Abbas, as far as the manufacturing space is concerned, the entire power sector, which we've discussed with Mr. Chokalingam, the manufacturing space represented by capital goods makers such as BHEL, ABB, Siemens, Schneider, and Cummins is showing strong gains. And what is now following suit are the bearing makers. Sharaji, we haven't seen participation coming in from Timken, from SKF. These were old world, favorites from a lot of Kolkata pockets as well. I remember them with great affection. This is a sector that hasn't participated despite railways being a major client, despite autos showing a very, very strong growth trajectory in terms of volume sales. What would be your best pick within the bearing sector?
I think SKF is a good bet to play on. That's a decently sized company. And normally, considering the type of growth that we would see across the economy, these companies should benefit out of it. I think SKF does come offhand to mind. I've never been very keen on looking at these companies because usually they had very little volume and very little shareholder interaction as well. Valuation wise, what is it trading at? It's trading at 45, 46 times. So I don't think it's very attractively priced, but this and most probably the other company that is amongst the larger players is Schaeffler India. So these are good companies to bet on long term, but I think maybe 1.5 year, you might not have much to do with them. In case some improvements do come in for the short term, maybe an SKF or a Schaeffler could give you some good returns. I believe SKF has not done much. Schaeffler has still moved a bit. So SKF could be a good bet. You could look at it, but generally I'm not very bullish on the whole space at these valuations.
So firstly, like you said that so far not too much enthusiasm and not too much disappointment has been displayed as far as the Q4 earnings go. But on the basis of the numbers that have come out, are you doing any upgrades within sectors or within some specific stocks? At the same time, are you also looking at downgrades, if any, wherever disappointment has come in?
Not largely. I think agrichem and chemicals, maybe they will look at a prolonged cycle of coming back into the forefront. So I think that is a space that could result in a bit of lingering more maybe a quarter or so. But not such as much downgrades. I think largely what I would look at is most of the IT companies, the outlook has been very somber and downbeat. And as I told earlier, that there is a high probability that most probably over the next 3 months we will reverse this mood, so they could benefit out of it. So I think that is a space that will see earning revisions upwards over the next 6 to 9 months. But in terms of results, when I look at the results across the board, whatever has been declared till now, I don't think there is any sector which deserves being downtrodden. PSU banks, I do believe maybe the advances growth isn't really that hunky-dory, and Q1 usually is not very hunky-dory for most banks. So I think that could be one space that could see some slowdown in terms of price movement over the next 1 or 2 quarters. But other than that, across the board, whatever numbers have come out, I don't see any reason for going for a sectoral, downward or upward revision for any of the companies.
Are you looking at the oil and gas space keenly, sir, with the kind of moves that we are seeing today again on the OMCs is again surprising a lot with the kind of high single digit moves coming in on stocks like HPCL, almost 8-9% odd on an intraday basis. BPCL is up by 4.5% and this is just on the back of slight cool off that we've seen in the crude oil prices. But if someone were to look to time into buying into these stocks, would you say that this is the right time? Because until June 4th, of course there are restrictions, but beyond that these companies could get the freedom of hiking the prices as well, and then perhaps looking at regaining what's lost. Will that mean an incremental move on the upside after June?
Regarding oil prices, I'm of the view that oil prices in the long term are trending lower, much lower than current prices. So that's something that's positive for most oil marketing companies. Temporary pitfalls like an OPEC cut or say some geopolitical tension that can obviously cause a flare up in oil prices. but over a longer term, I think gradually they're going to come down. And with the type of advent that renewable energy is making, I think gradually you have a major part is transportation, and within that passenger vehicles and commercial vehicles. So once that shift happens, I think an industry that was growing globally at what 3-4% would find it difficult to keep growing. So I think oil prices are going down. That's a given. Maybe not in the immediate short term, but over the next 3, 4, 5 year, 10-year horizon, I think oil prices are on a sharp downward trajectory. So that's positive for OMCs. Now coming back to at what valuations they're already trading, I think 1.5, 2 years ago it was an excellent bet to have. But what you have right now is, given that oil prices are not going for a steep fall tomorrow, it will happen gradually over the next 5, 7, 8 years. So I think homogeneously, if I look at it, I think high probability most of them are trading at 9, 10 times HP, BP, IOC. So I don't think there is much growth over the next 1.5, 2 years. Most probably the earnings would remain flat. Rather, most probably FY24 are the peak earnings for all the three companies, and next quarter onwards we would have much lower earnings. So there is a high probability that these stocks have more or less peaked out. Occasionally, when this news comes in regarding oil prices correcting, maybe a day or two they show the bounce. But in terms of long-term valuations, I think they are fairly to fully valued. The only trigger for them, particularly for IOC, could be that in the long term they are doing a lot of diversification, which starts yielding result maybe over the next, after two,
So
three
sorry to
years.
interrupt you, sir, but we do have a top management joining us now from Dabur. Ankush Jain, the CFO of Dabur, is now with us on the phone line after the company has reported its numbers. Mr. Jain, good afternoon. Good to have you with us on Business Today Television. I wanted to first start off by understanding from you, as far as your volume growth is concerned, sir, it's come in at a 4.2%. Tell us how much of it has really been contributed by the rural contribution as far as the volumes are concerned versus the urban volumes as well?
Mr. Jain, can you hear us? Okay, I think there is some issue with the phone link. We'll again get back Mr. Ankush Jain. Remember, the company has announced a decent set of numbers. Profit is up 18% for the fourth quarter at 341 crores, and a fairly decent uptick in EBITDA to about 467 crores. Revenues have come in at about 2815 crores. We'll just get Mr. Jain again on the phone line. Yes, Mr. Jain, good afternoon and a very warm welcome to you on Market Today. We'd just like to understand how have the profits improved to such a degree, about 18% higher. What has contributed to this uptick, sir? I think, Sakshi, can you hear Mr. Jain? At least I can't.
No, I think there is some kind of an issue. We are unable to hear Mr. Jain's comments right now. Mr. Jain, can you hear us, sir?
Hear you very clearly.
Okay, hi sir, good afternoon. Sir, the question that was put out to you was on the bottom line. Sir, if you could please help us understand the key contributing factors in the improvement there.
Yeah, let's look at the context. Profit after taxes have increased by over 16% in the quarter, and even operating margin has increased by 14%. And on a like-to-like basis, it has increased by 16% in the quarter on a top line of 5%. There have been multiple factors. The factors being there has been a bit of deflation, but there has also been value addition exercises done by us, either through cost optimization or through revalidation of all our factories cost, people cost, etc. So we have been very conscious in driving cost savings, which has led to more profitability increase in the quarter, and also in full year, while 11% operating margin growth. On a like-to-like basis, it is 15%, almost 2x of revenue. So this year, I think, and this is despite the fact that we have invested almost, our growth in advertisement spend has been 30% or thereabouts. So we have redeployed most of our efficiencies back into demand generation, which we believe will give us strong returns in the future.
Sir, could you also explain to us how was the rural demand versus urban demand for you in this quarter, and how do you see things panning out going forward?
Oh, sure, definitely. Rural demand for the first time in last 3 years for the industry as a whole has also grown slightly ahead of urban. Since last 3 years, it was actually lagging urban by almost 400 bips, primarily because of super hyperinflation and contraction in demand in rural. But there's some bit of green shoots visible. The rural economy, especially for FMCG, has started, at least slightly higher than urban, which augurs well for us because our distribution in rural is much ahead. We are much more penetrated, and in fact, we are the second largest penetrated company in terms of distribution in rural India. And therefore, I think it augurs very well for us in the coming quarters. So we are quite hopeful of the demand recovery.
Okay.
Mr. Jain, let's look at your international business. There were hopes and expectations that Dabur's international business, especially from Middle East and North Africa, in particular Turkey and Egypt, would do very well. How have the currency fluctuations impacted growth from international business, and how do you see the next 2 quarters from the Middle East?
Okay. So first of all, about the total international business. Total international business in constant currency has grown by strong 16%. But while you translate it into India, because of currency, devaluation, as you said, it is around 6%. Coming very specifically to Egypt, Egypt in local currency has increased by 46%. And even in INR, where there were devaluations of 40%, it's increased by 7%. Likewise, Turkey has increased in local currency by 52%. And even in INR, it is around 6%. So they've been able to take price increases to counter heavy devaluation of the currency and consequently inflation. On top of this, the international business has also been able to expand their margins despite strong headwinds in terms of currency and inflation. So I think it's in a pretty good shape than what it was a couple of years, 2-3 years ago. It has started registering growth quarter on quarter. If you see every quarter this year, they have grown double-digit constant currency, and our strategies in terms of playing specific to countries, specific to categories, and therefore gaining market shares has started yielding results. And we are quite hopeful that even in this year, they should continue the growth trajectory in at least constant currency. While some of the currencies will overlap the depreciation, but as you know, in April, Egypt has further devalued. But I think we are pretty confident that the teams over there and we over there would, protect our margins and continue to grow our business.
Okay. Mr. Jayat, when you look at volume growth of about 4.2%, this is a very pleasant surprise given the fact that Dabur is primarily dependent on rural incomes to show a strong volume as well as top line growth. Could you please explain to us how have the Badshah Masala portfolio performed and what has actually contributed to in terms of volume growth? Which products have come up with such a strong show?
Yeah, in fact, first of all, about Badshah. Badshah has grown by 20% both in the year, quarter and in the year, 20% or thereabouts. This is almost in line with our intent when we acquired this business a year ago. The team has done a wonderful job in expanding the reach, in building the brand, in launching new variants, in cutting out the inefficiencies, and therefore even protecting in the long term probably we are in the right path to deliver even more and even gaining market share. Now coming to India specific business, on a full year basis, oral care has done relative excellent. It has grown by almost 12%, and in the quarter by 20%. Likewise, home care, which includes Odonil, Odomos, Sanifresh, etc., has also grown in up of teens, 15 odd percent. Likewise, shampoo has grown by a near double digit, 8 to 9%, and healthcare, cycling on a high base of COVID levels, is still done almost 5% increase with healthcare, OTC healthcare growing by 12 odd percent. So I think to me, and on a 5-year CAGR, all India business units have done close to 7 to 8% CAGR and cycled high bases also of COVID. So I think, and more importantly, what's relatively important is, are you gaining market share or not? Are you really growing ahead of the categories where we are? As an example, Chyawanprash, where we hold 60% plus market share, we still gain market share, despite muted growth. That means we are growing ahead of the category. In oral care, we've become number 2 player in the country, and number 1 in certain south markets. Number 1 player, whether AP, Karnataka, and Odisha, and we are, gaining shares bit by bit, aggressively. And also, hair care, while we gained 115 bps market share in the quarter. Likewise, honey, we've gained market share. Mosquito repellents, Odomos, we've gained whooping 700 bps market share. So I think that's more important. That are you gaining market shares or not in an environment which was not, relatively, which was quite volatile, especially for FMCG, given rural demand was under pressure.
Absolutely.
I think this is led by a more distribution expansion, more investment, increased investment, and so on.
So on the margins front, I wanted to ask you, it has improved to 16.6% from about 15.3% earlier. How do you see the margin band growing from here for FY25? Would you be looking at levers like price hike to improve the margins from here on?
I think it'll be a combination. First of all, just to give the yearly context, because in our business, full year margins are something which is more relevant because they are seasonal. So full year it's 19.4% margin, and on a comparable basis it is 20.2%. So I think going forward it will be a combination of margin expansion. It will be price increases wherever possible, then with more value addition, with more premiumization. When I say price increases, it means premiumization more, and then also efficiencies driving the organization. With the increased in volumes, scale benefits will come. So combination of those, and whatever we gain through efficiencies, a significant part of it will be redeployed in demand generation, and I think 75 to 80% will be redeployed in demand generation, and 25% of savings or price increases will flow to the P&L. Yeah.
Okay. Mr. Jain, since you have the CFO C-suite with you, I just wanted to understand, you have 1,000 crore in terms of debt as far as Dabur is concerned. Any chances that you want to reduce it, or this is manageable?
Yeah, it's manageable. Our net cash in the net bank balance and investments are almost 6,500 crores at global level. While we do a bit of borrowing, to meet certain capex requirements and to meet our maturity requirements, because some of our past funds are locked into long-term investments, government bonds, G-Sec securities, etc. So I think it's pretty manageable. Our debt equity ratio is pretty low, and net we are still having 6,500 crores net of debt as funds, which we can redeploy anytime, provided there is an opportunity in terms of acquisition, which is very synergistic to us.
Okay. Mr. Jain, our final question to you, sir. Not only has, Dabur not performed in sync with how the main index has done over the last 1 year, but it's been a bit of a disappointment when it comes to long-term shareholders. Given the roaring bull market that we are having in India, what message do you want to send to shareholders with regards to this kind of a muted performance on the stock market?
Okay, I think first of all, for a very long-term shareholder, which has been there for more than 5 years, 10 years, I think, Dabur has always created value because we sell and we are manufacturers of very robust brands which cater to the needs of every household in India. We reach almost 8 million outlets. Every third household or 80% of Indian households we consume one or more of the Dabur products. Our fundamentals are really strong. Our reach, we reach almost 1.22 lakh villages, which is one of the highest in the country, almost amongst top 2. Likewise, our distribution reach is amongst the top 3. So I think fundamentals we are strong. It's just that a bit of rural consumption subdued the consumption because of hyperinflation in last 3 years, and which squeezed the liquidity and the disposable incomes of rural consumers. But I think with visible green shoots, with the government, increasing their capital infra spending, I think that augurs well for FMCG companies probably going forward. So I think you look at a long-term value and how resilient the business is, rather than seeing only probably a short-term, a quarter or maybe a year, picture.
Okay, Mr. Jain, not to drag this point a little further, and in absolutely the gentlest possible way, I'd like to mark CAGR performance of Dabur over the last 5 years to a 5 percentage point uptick each year, with a 13% uptick each year on the Sensex. I again say there is nothing wrong with the company. I'm just asking, what message is the really long-term shareholder who believes in India's aspirational growth, who believes in the kind of genuinely fabulous returns that Dabur has given over 20 years, do at this point of time?
Yeah, the 20 years, I think the share price has given multiple return. I would only give a very gentle message, like the way you put it. That India is still one of the most under-penetrated countries in terms of consumption, whether it's hair oil, whether it's toothpaste, whether it's home care products, whether it's skin care products, whether it's health care products. So I think the opportunity in front of us is really big. We have 150 or crore people, and the more penetration if we go to do and reach and increase, I think this will lead to long-term value only. And then, as I said earlier, the fundamentals of the company in terms of infrastructure, the capabilities, in terms of operating capabilities, etc., is extremely good. It has been developed over the last so many years. So I think we are in a safe place. Yeah.
Right. Thank you so much, Mr. Jain, and we wish you the very best in terms of creating further shareholders' value. There is absolutely no doubt in my mind that over the last 35 years, one of the finest companies on corporate India has been Dabur, and it has created immense wealth. We wish you all the best for the coming quarters. Ladies and gentlemen, we'll come back to the markets. 329, flat as flat can be. Nifty 51 points higher. Flat as flat can be. Nifty Bank 150 points lower. Nothing much happening on the IT index, up just 40 points. It's the mid caps, the small caps, and the large, the NSE 500 stocks that have shone through in this wonderful weekly expiry of the Nifty today. I'm sure more gains are in the pipeline, but this is as far as I am concerned. Sakshi, over to you.
All right, let's look at Dabur shares also. They have inched towards the day's high point after we've spoken to the management, a confident management at that, of the rural recovery. But Sharad is here with us. Sharad, apologies, and thank you for your patience for standing by for all this while. We couldn't get enough time to speak to you. But on Dabur, after the earnings and after you've heard the management, how would you advise? We've seen the FMCG space completely lack in being a laggard in the markets, but the way you've heard the management, are there any green shoots emerging then?
Yeah, certainly the rural pickup is a very positive development for them. And last 3-4 years, I think the external ecosystem has not been very positive for them. Add to that the valuations that they started to trade 60, 70. And usually, as a rule of thumb, when you buy something 60, 70 times, it's very difficult to make money. Ideally, most of the positives are discounted there. So I think that happened over the last 3-4 years. I believe 2021 onwards, they kept trading at 60, 60, 60, 60, 65 times. Most of the FMCG stocks for that. And I think Dabur is unique in the way that they put up, very unique combination where there is an Ayurvedic concept along with the FMCG concept, not typically comparable to the international types. And with this rural side picking up, they have a stronghold there. I think even with the summers being a bit rude, there is a high possibility that even the juices, etc., should ramp up very nicely over the next 1 or 2 quarters. And in the long term, I think the brands they are positioning, that's a very strong place they are into. 1.5% kind of margin improvement, the rapid expansion, distribution reach. That should all start culminating in. So maybe not immediately, but over the next 2-3 years, you could be looking at an EPS of somewhere around 18 to 20 bucks on the stock. And it could easily get 35, 40 times. So the maths is for you to do.
Okay, well, many thanks then, Sharath, for being with us on this show and helping us really understand all these insights. We shall hope that you come back very soon with us on Market Today to discuss more insights on the markets. Meanwhile, the markets have shut sharp, 22,648 on the Nifty. So that's a green tick, 43-point uptick. The Nifty Bank, however, has ended in the red, 0.3% down, 160 points lower in trade at 49,231. It's the auto space that continued to perform in trade today, and we could see a percent higher in trade for this one. And that was the leading index in terms of the moves as far as the sectoral moves are concerned, along with metals, of course, that also was up by 1.3% odd. Gains were also seen across financial services, on pharma space, on the healthcare space as well. Oil and gas also continued to move higher with 0.7% gains coming in, whereas with the media, the PSU banks, private banks, the realty space that declined in trade. Broader markets, of course, the mid caps continued to soar higher and ending above 51,075 in trade today as far as the mid cap 100 index is concerned. Top movers, BPCL, Power Grid, Asian Paints, Bajaj Auto, Tata Motors, and on the FNO side it was Chola that shot up almost 10% in trade. REC, India Mart Intermesh and HPCL followed as far as the moves on the FNO side concerned. With that, viewers, it's a wrap on this special edition of Market Today. That's a goodbye from both Shell and me, but do stay tuned on to Business Today as we will continue to get you all the insights from the world of business and finance even after the market hours.
The Election Commission ended days of suspense and released final turnout figures for the first and second phase of Lok Sabha elections on Tuesday. The first phase turnout has been revised up from 63.7%.